Right, hey guys, I hope you guys are doing well. I know I've been missing in action. I haven't been doing really much in terms of giving you guys any content. Because I thought with me, when I post you contents, I don't really talk about like a new structure thing. More so I just talk about the price section, what I reviewed, and just going from there. As in things that you guys already know, and I really appreciate you guys watching the video. So let's dive right into today's chart. So basically on Monday, say around late London, but we can look at price section on Monday. I'm not too sure if I did a video already or not, but we just kind of look at this. So essentially, this price was just stuck within this level. So if we want to look for a change in state delivery, this line needs to be broken for the least. Unless we know that from the structural perspective, like you can see the indicator I marked here with the negative SAM indicator, etc. So if I want to say trade towards it, I need to know that what kind of structure is this. For example, the structure, breaker structure, does it have a liquidity grab? Did it grab liquidity, as in sweep liquidity from a structural perspective from this low, which it didn't do it. And I'll show you another trade that I did. There's a few criteria that I'll trade at, but we can look on 5 minutes and how we, by examining the price section on 5 minutes and also 15 minutes in terms of the paper it gives, we can dictate a certain price section. Okay, I see the order block or just the order block here, and didn't touch my low time requirement, but hit the order block here. This didn't work in, it just kind of formed equal high. So I was looking at my setup here, and then saw the mitigations here. So only this pile of price, I don't really care about this price, I care about this price just within here. And so the overall mitigation, traded it and just targeted structure high. Hit this level, didn't hit my 10 pips. I thought I was going to break it, but it was way too naive. Why? This is the actual low, the lowest level of this current range. So if I don't take this internal range liquidity sweep, this wouldn't be viable. This here, it does make sense in terms of setup, but it won't do to challenge a high really. So unfortunately, that was about 5.77 RR, this whole thing, just break even from the review. So later on, price went into this price section here that I call it the here. And so on FXCM, price formed a very lovely reaction, formed like an equal low roughly here. This here is a Forex.com is a different thing because you can see reactionary. So when price formed a reactionary equal low, then I can look at trade higher towards what the drawn liquidity, which is as high because we ultimately did take the internal range liquidity. This here was simply try to form a setup which didn't form so. So yeah, a 1R, sorry, no, a win here, break even. And this here, I took it on demo, I didn't take it because I was like too lazy to bother. Here, price, what it is, formed a equal high here. And then this here, they all formed the equal low for next second low. Whenever you get like a time model low that forms another equal low, it's pretty much a no-go, especially when you have a new time model coming in. This is already a very price section. So why isn't I long here? Well, where price is coming from, I'm looking for the drawn liquidity thing here. So price was resisted from the 1 hour CB. When price form 1 hour CB, there's a bit of a reaction. It takes time because usually price can impulse, but on the 1 hour or any kind of high time repeated rate, generally it will take its time to retrace to perform more of a beautiful price action after. So from this area, I kind of looked at, okay, respect, failed to take that high, equal high, and then price here, there's unfairness of price. So if I were marking structure, so marking from this range, didn't hit my 50%. And then say if we're gonna mark DT broke zone here, didn't hit the 50% either. Yeah, and this one here, I had no trades. This here, this was the liquidity grab. I don't do the liquidity grab generally unless I actually touch my POI. And this here, when you actually call it, this will still be valid because why? It didn't actually displace away. This here on a lower time frame there will be displacement, but here on M1 there's no displacement. Price just grabbing liquidity from every other candle low and then to pump higher. We're looking lower time frame, to me that's already mitigated. So and on its own, that should be mitigated by this wick, so that it's wick sell. But you have determined that, and it's hard to do so. I confirmed on 5 seconds and 15 seconds that these were already snaps, so then I'm not interested in this price section. Then coming from here, if you were to trade in the range by range series, you want to look at that range we're in, the premium discount. So I don't want to trade in discount to go for a short. So just wait for a bit more breaker structure confirmation. Here, this here is the quick grab of a POI. So that will be revisited later, but we still have a broker structure after. So and later on we hit some kind of level, yeah, like a daily low, sorry, Asia low. Then later on we receive some kind of retracement. There's still more drawn liquidity here. So in terms of range, deviance of range, price hit a momentum wick as we speak, like this. So I didn't look for anything until a bit more of a structure. You see, that's my old block. There were busy reaction. I didn't need to really wait for the busy. I had my high-low candle, the candle here taking out the previous candle high and low. That's my high-low candle, and then refine that further down to my 15 seconds. So it was like this in terms of the volume of the candle, but I'm looking at my high-low candle, so I had to refine this. And so it was like this, and then still price reacted in here, so I'm looking for my changing character on lower time frame. And again, going on lower time frame, actual candle taking out that high. This is here, so that's didn't touch and now touch. So there's a shadow candle on its own, but I have to refine this to the high-low candle. So price on its own makes sense, but I'm refining this to M1. That means a concept overrides the lower time frame for me. So what I did is on account. So this here, and then if I have to say TT Forex, the low high taken here, and he marks his zone. And I got this good explanation from a friend of mine. I can kind of understand why price retraced to 50% because that was the average price from an institution point of view. And in terms of this here, the candle structure, that's just a sort of straight taken there. So there's no, if I were to look at lower time frame, and see there's a busy, I can see there's a BPI here, but from my point of view, there's no real reason to jump high, simply from just taking Asia wasn't good enough. Sometimes it can, but the momentum price was way too strong, and I was looking for this area as well. The reason why I targeted at the 50% is because this area hasn't been tested at all in terms of supply and demand. This area, the actual order block was shouting this whole candle. There's no reaction. See, this here, there's no reaction at this order block whatsoever. So what this to me is that I'm marking at the 50% in terms of supply. So I'm marking at the 50%.
I didn't get that. Could you try again?
Shut up, Siri.
Okay.
So going from here, I know I have this wick here, but there was nothing significant, and I know from this point of view, this whole area is being snapped. So I can actually use this area as the only old block because that's the bullish candle, the wick carrying the volume, but that has been mitigated already. So I can't use that. I have to shadow the whole thing as the area of already mitigation. So that's what I'm looking at price. This here, it doesn't make sense for price to go long, but if it's simply retracing for the fact that it hit the supply and demand zone, that is fine. So price can form low resistance liquidity sitting here. It hit that quite perfectly. I didn't target tempest because I just said like, oh, that area wasn't retested. That was expensive move, and then with the momentum price going higher was stronger than the lower price point. So I just wanted to see what price is going to do, and that there is 7R. So I'm pretty happy to just take TV off like 7 pips because then, sorry, not 7 pips, like 9 pips. There's still 7R. Just that the commission is like 0.5, something like that, etc. So I mark my other second POI because technically it's not really liquidity grab when I reviewed it because this how candle is still holding price, but I need to be aware that this area is a liquidity grab. It's not a liquidity grab off a structure, but it's still a liquidity grab. So then it's not reacting to an overblock like an overflow mitigation. And down to high time frame, you can see price on 5 minutes. I mean, you can see on 5 minutes there's like 50 gaps, but on 15 minutes, it's something that's so efficient. This price, if it's not coming back to here, then obviously we'll come back to it because price is always attracted to inefficiency, gaps, etc. So just marking that as our area of interest later. So from this point of view, price retraced really quickly to retrace to a POI. These ones are already explained in pictures, but just to go through, where is the actual candle high taking out that candle? Yep, like this. And then the body breakdown, is there any candle coming back? No, so there's a valid POI. So like that, price took 10 pips really nicely. Price retraced, and I was marking my POI. That's separate. Why is that? Okay, so, and from here, my order block is here, so that means the original price is never mitigated. Some people could be looking at this area to trade but never tapped. I think we can mark this area to see whether the price tapped on this zone or not. So yeah, from here, this price was at the low, that got mitigated already. So price swept this liquidity, meaning that it disrespected the top POI but didn't touch the second or bottom POI. So to me, that's a liquidity grab go between. So then, yep, that will mean that it's a temporary trend. So we need to make sure that whatever I'm trying to target long is that I need to find a draw on liquidity. And I can see all of these wicks centralized here. There's no real hard body closing above. So that's something that I can target for the least. Again, from here, this here is a sweep of liquidity, I think. Or there's just plenty of liquidity sitting at this old block here. So again, see this here is not old block that I can look to target. Yeah, and then say if we were to do the DT Broke zone, so this here, the low, the high retrace, so that will be a DT Broke entry area, but I don't do that. Maybe you can do on 15 seconds to low for low time control. You can do on 5 seconds to examine this price action. So price doing this here, 5 seconds, low, and then changing character, or this here if you want, sweep, and another one here. Like, you gotta make sure that your setup is correct and your entry will be correct in that manner. So this here, like that. And the forex actually market range from the previous history. I think it's a very good move because it does show to work. It doesn't mean that the ICT range high, range low doesn't work. It still marks the range, the swing range in the surprise. And I think market range also does the swing range in the surprise. I think that's whichever how people use it, it will be valid as long as it makes money, right? I mean, and in terms of consistent manner. So I use both because I don't actually trade DD forex just yet. I mean, I look at this range for as confluence. I don't actually need to say, okay, I have to basically use that to work out. No, I don't actually have to. So price is another really funny thing. So that's what liquidity. That didn't really respect an order block. Instead, it kind of respected momentum wick here, but it doesn't actually fit my rules in terms of momentum wick entry, direct entry. So later on, looking at order blocks here, there's an equal highs in here, liquidity, price impulse down again. Yeah, so what price did again? So swept that liquidity here. This touched on Forex.com, but didn't touch my POI. It's still 0.1 pip away, but now prices decide to rock higher because what it's doing is that on higher time frame, it was doing that mitigation. Then you see one candle mitigator already. So that's the two candle rejection theory from Ariel concept. I don't think this doesn't work. I think it works magically, but especially when it's a 4 hour, it does make sense. Or sometimes it makes sense that price can take that 1 or 2 hours to move. Yeah, I took 2 losses and 2 wins, and let's have a look. So why I was wrong. So I have to talk to you about this one here. We have to look on 15 seconds. So we have breaker structures, okay? Changing character and from this here with a structural range. It hasn't formed yet. Then with here, I was looking at price that we have a chalk. We have also a breaker structure in terms of vertex concept. So from this range, price is forming like already mitigating the 4 hour. From here, the 4 hour, we have one candle wick here. So that means price can either sweep this level or respect this level in terms of wick volume. Supply and demand. So this here, 1 hour, going here, actually 1 hour, this one. We have a body break of this accumulation, body break of this accumulation, and going with 15 minutes. The structural range doesn't actually mean anything. So this here is low, it's just there. But we can see what I failed to recognize was that this here is a range. No, this here was just a reaction point, it's a midpoint. So from this high low, we try to look for price to say if it can break this high, but it failed to do that. So it gives us the opportunity to say, okay, we're taking this level, we may be looking for a particular lower time frame order to react and jump higher. So in this case, it mitigate a high-low candle in 1 minute, and I'll bring you to that chart very shortly. So we're taking that internal range quickly, we're giving this opportunity, sweeping the low to challenge the high again. So like, it can happen like this very often. Well, I can show you a couple of examples on lower time frame. It takes an internal range, then jump higher, and even sometimes it can take the lowest level of the bullish range, like a price action within the bullish range. And I'll jump to that and show you what I meant. So what did price do here? Price mitigate a high-low candle on M1. See, the candle taking out the previous candle high and low. There's a valid overblock. So price impulse higher. Hardly leave much of a trail in terms of reactions. So I was kind of feeling, oh, okay, I was looking for a short sitting here and here. That didn't work well. And you can see the pictures I posted. So essentially what I was kind of looking at price is that, for example, we have 5 minute busy forming here. We got 3 busy sitting here. and we got price sitting here without any reaction of feeling inefficiency or taking any internal range squeeze. I mean, kind of did internal range squeeze, but nothing significant because it's not swing low that's taken. So from here, we're looking at this price went up on its own, maybe mitigating an order block on a lower time frame, at maybe a significant level, but we didn't react any busy to go up. And then price just consolidate within this area. And then later on, looking on 15 minutes, is that sometimes if that 5 minutes showing you a lot of busy, but we have no busy on 15 minutes, that's when you need to be extra careful. And Friday's trade is one example. So I think this is why I think it's good to show you all the price action of this week that happened. And of course, I didn't do as great as all the other days because price was just moving too wildly, as in it's moving the right way, the high time frame way. It's not moving the 1 minute way. But anyway, from here, when we see price delivered to the only 50 gap existent, price closed outside of the 50 gap. And then I know that on the 5 minute, price closed in the body. I mean, the body closed, but see, in terms of 50%, this 50% was respected by body. But anyway, we're gonna look on 1 minute. So this basically that you can tell from 5 minute price action, we will not trade, we will not participate in this area until price going into the 50 gap on 15 minutes. So from here, marking the TT rock zone to 30%, and this is 30%, that's great, it's one confluence. So then I'm looking for my overblock to trade. And from here, I see that price did a liquidity grab GB, didn't go into my lower time frame overblock. Later on, what price did from here, that's my markout zone. So this here is a snap PY. But what made me make the move? It will be a very, very similar reason that I did for today's trade. I mean, I didn't do that. Wasn't able to enter because I didn't hit my order, but I'll tell you about it. So from here, I'm looking for like a possible break-in structure because like this here is a snap mitigation POI. Even this POIs, these POIs with all snaps. So if a price action, a range containing snap mitigation, or a reaction from a snap POI, I want to wait for a break structure. But sometimes I don't have to wait depending on how strong the confluence is. From here, there's like clear POIs, there's no snaps. I think that's why I was enticed. But at the same time, I had my bias wrong. I thought it was bearish because I thought the internal range low wasn't taken in order to create the new high. So I was wrong. Mistake. Anyway, from this area, we can look at our refinements of low time frame. So price already did a break structure, even changing character. So I'm looking at the area, I was like, okay, yeah, I'm quite looking forward to enter that. And then from here, there's my overblock. That's snap. That's here, liquidity grab. You see my overblock. The other one here was never triggered. So that's just liquidity grab. Therefore, price worked this area afterwards. So this here is the overblock here coming to this area. So I'm looking at this here in terms of mitigations, price already together here. So on my lower time frame, this here was actually a equal low. So as long as it doesn't violate this area, so I look for equal low, and I was trying to be more conservative because I don't want to enter here directly. What if this actually get worked out? So I look for my changing character. I looked on 5 seconds and 15 seconds, and here from here going like this high, this low. So just the same thing I showed you just earlier that got taken. So that's my confluence. Marked it really, really quickly. So price kind of rejected from this level, hardly any body break, below over 30% on FXC and feed. So then I was okay. I looked at that and looked at the mitigations. And of course, when I entered around here somewhere, I think price still worked me out. As in, like it worked out of this area, but my stop loss was okay. My stop loss was somewhere here, I think. Yeah, my stop loss was here, and then still kind of worked out of my initial entry point. But that's just the way it is. It's a snap model. Isn't what that means is that price will constantly do liquidity grab and mitigations to pump price. So yeah, price hardly formed much of a busy on lower time frame, and later on this year it just moves price on its own and pump price higher. So target 10 pips. I know price can fight a lot further, but I didn't bother. So from here, I'm looking at price. You see this here internal range. That's a high to me, like that. And you can see the changing character here. So what the price is that it went into 5 minute busy. So it's quite handy to look at them at the same time. So 5 minute busy from here, and this here is internal range liquidity sweep. So like I said about that structure, if this low failed to take this high, sometimes what it will do is that it will do internal range liquidity sweep, and to give that second opportunity to take the high and take the structure by body breaking it. So we're sitting at this level. That's what I'm looking at in terms of, I mean, this here is what DT Pro is looking at the high as well. This here is just a Matthew Sam one. Yep. So because here is internal range liquidity and then I have a body break, in terms of structural range perspective, DT Forex would like to say that this here is a protected low in terms of the structural break. Of course, this here is just one body closure. There's no hard close. This candle here is a hard close confirmation. But still, it meets my setup, and then I have a drawn liquidity to hit in terms of the higher time frame. So marking all my PYs, etc. You see, these are all just clear PYs, and this one here wasn't clear on. It's not clear on this feed. It's clear on this feed I was looking at. This here was the actual low of a candle. So yeah, I just traded it. But if you say, okay, you don't look at the order like I do, that's fine. You can look for your area here that just hit your 50%. At the same time, candle structure, look for that one again, another hit of the 50%. Or do this one. So every forex.com, every feed has its own like amount or slight difference. So that there is actually something that I can draw a high and low. Why is this is so annoying? This is snap, and then later on price, what it did is that it did eventually sweep over this level at 4 p.m. UTC time. Good news, but this here snap. It needs to be taken. But it created objective. So this here, what was so interesting about this price is that price is moving in a 15 minutes fashion. Like you would never believe that. I mean, not often do we believe that price will retrace all the way to the extreme. But so basically from here, price at mitigations, expansion, and then what do we see on 15 minutes? Yep, 15 minutes with just one big choke. There's no real, like, there's just one big straight line. Price coming in with little overblock mitigations and coming back. But this here is respecting higher time frame. Why is that? So, like I said already, this here is a 4 hour, the first 4 hour reaction. Price respected this area. And so, what price or what market decided to do is that the first candle coming into the city is this one. That's the longest one that held. The price at this area, the sweep, the two candle range theory to jump up price. What this price did later on is that, yep, it did come this area, but what it did after was that seriously, it just went into the 1 hour busy. I was marking this area. I was like more so when price decided to impulse down. I was expecting price to come to the 1 hour busy here or even 1 hour busy here, which it failed to do so, and just stuck to do the 4 hour. And I do understand, I do acknowledge that price was wanting to go long. I was looking for opportunity to go long. I did something. I think 2 losses and a win after. I was looking for, where is it? Looking for, I was looking for a long here and a short here somewhere, I think. Yeah, so from this area, this here on 5 seconds, it was stuck in one structure. So I didn't start really, wasn't really going to look for any particular trades until seeing some momentum, which would be like, I was looking for this. So price kind of reacted to the momentum with respect. And at the same time, we have 5 minute Cibi reacting. So what I really was not doing great with it is that, for example, price impulse like this, we have a long wick here with no reaction of any higher time range Cibi or busy except for 4 hour, but sometimes it takes hours to move. Like for example, this whole week it took hours to move. So it took like almost 2 hours to move. And then so from here, this whole area is one area of consolidation. So ideally, okay, we're looking at consolidation. So we want to see any price point that's been respected. So for example, this is a trade that can be made. This is a trade I've taken, and I'll explain shortly. So from here, we want to see some kind of favor gets flowing through, respecting with a body rejection to close over this candle, like what Ario says. So again, looking on 15 minutes. So for 15 minutes, we have the Cibi, but the price break is low because then it will consider that the Cibi is actually working. At the same time, the Cibi was a closure within this body, which my friend often say that we will sweep it. Only a wick respect, and the wick respect after is something that is so from here. 5 second was stuck, so I shouldn't be trading, but I was tempted to trade it. And just yeah. Then price what it does the liquidity grab and then actually hit the POI that I was interested in. So like a liquidity grab GB again, then price impulse and leave it in trail for me to enter. And because I was like looking at this here, price wasn't falling through. I did look for a hard time frame thing to fall through unless your POI or where your entry is valid. And from there, price kind of did is 0.3. It's not a snap model. Snap model is 0.1 to me. 0.3. Yep. So again, falling through price this year. I'm gonna mark this out. So from this area, we've got 5-minute busy. So what I want to see is that I want to see this here is a very long wick. Just marking off the order block, etc. This here is a very long wick. The wick is more than 50% of this candle. So then I'm using the wick as my POI and to match and make. So like I said, I do override my lower time frame of an M1 candle as on the concept makes sense. So from here, because this here, in terms of bullish impulsive break, sometimes I don't do that, sometimes I do, depending on whether I remember or not, but I always align with M1, if that makes sense. So from here, this here, body break low, but nevertheless, this here usually would be the body, but that's too wide, and then it doesn't align with M1. So if I line this up here, this here will be the wick volume of the bullish candle, which means from this candle, the bearish order block, say for example, it's an order block, it was transferred this long volume to this long wick here, kind of reacted to the volume momentum wick on 15 seconds, and then going to here, we can look on lower time frame to make sure that aligns with our idea. Yes, so it aligns with our idea in terms of 5 seconds. Sometimes aligning them, just double checking whether you're right or not. So from here, price sort of formed a bit of a trend line here, lower time frame, then we impulse higher shortly. So to tell you a few things, so when we confirm this break, got changing character here, see a firm changing character, so retracement here, and now the break above. So there's 2 breaks up here, and then so if you're looking at this price pattern here, constantly disruptions, retracement mitigation of this area. So this here is another one. We'll lock the space. Space is mitigated, but the body is mitigated. So this here tap very nicely. That could be potential entry, or you can wait for the reaction here and simply jump for another entry here because you're reacting off the 5-minute busy as well. The real 5-minute busy is that it formed at 9:45, and then we have a span of this much time, 3 minutes to react to trade this opportunity. Yeah, so I kind of traded that somewhere around here. Reacting at the 5-minute busy. I was comfortable with trade that because simply we're stuck in hard time consolidation, and then with the expansions of Beverly gaps later on, it presents very, very nicely. So that is the other trade I've taken. So I'll bring you to today's chart here. Alright, so I'm looking from this area. Okay, so I know these are snaps, okay? These are snaps. This here is a break structure that still broke above to snap here. When price is coming back, it left a significant liquidity in here. But nevertheless, doesn't mean that I can't look for a trade. I can look for a trade idea, but this one here is a lot of mitigation. I'm looking to, yes, also push that, but from here, because of how weird price action is performing in this week or even last week, I'm looking at how price is reacting on the 5-minute in terms of busy and CB. So I got a 5-minute busy sitting here. I have no 5-minute busy sitting here, and I got 5-minute busy sitting here. Okay, so from here, this here, when it's so efficient in price, that just low resistance liquidity. Then I mix and match and look at my 15 minutes. So I got my 15 minutes here. This here had a body closure. So what that means is that, okay, so this here is liquidity for price to take later. And then look what it was doing. It was more just reacting to a momentum with some 15 minutes. And then price still held, interestingly. So from this area, look at here. We have the 250 gaps with no reaction at all. So, and then all this price being so efficient, this is an area to be revisited. So this is what gave me that confluence to trade short as well, just one confluence. And the other major confluence was because there's a liquidity grab of a structural high without body breaking it, but liquidity grab of a structural level is essentially it delivers a mission, but later on it's liquidity to be targeted. So I'll go on here again on 5-minute. So I'll quickly just go through. We've got 5-minute here, busy, no reaction of the busy at all. Again, we've got busy, and another here, body closure is liquidity, heavy liquidity. I even mark my alerts here for this area to be taken. Because let's say we have a 15 minutes busy, we do have a 1 hour 50 gap forming, so price can potentially react to this area. But I'm also interested, okay, say for example, prices go in further to sweep this liquidity or react to all this overblock, perhaps. Yeah, so that's just what I'm expecting as a whole, because we ultimately we did pick the previous day high, even before Asia, I mean before London, and then we took even like high levels of liquidity. I'll go through this here just within the 1 hour supply zone, just in terms of volume. That's the supply, the 1 hour supply zone is a heavy liquidity, heavy liquidity. Then nevertheless, from this area here, retracement liquidity, this here, I'll show you the same thing in terms of refinement on 15 seconds. So here, from here, we got CP reaction. There's no CP reaction when we created this, there's no CP reaction when price created CP. So then I'm looking at how price will react off these areas. And what is interesting is for me to get on a long trade before the breaker structure. I mean, I did wait for one breaker structure to form, which was this here. This is a breaker structure to me, and it does make sense as a breaker structure, but it's not a DT-Pro's breaker structure. So here, you don't have a hard close here. So then this isn't actually a valid breaker structure. Your valid breaker structure is this high here, the valid breaker structure. So this here chain reactive, there's no second break of the hard breaker structure. So this here is a valid breaker structure later on, and it does show as 15 minutes breaker structure like DT-Pro zone. But nevertheless, from here, what my confluence were, okay, this here is a DT-Pro 15 minutes break. Okay, looking from this area, you can see I have my confluence at DT-Pro zone. Price respected didn't body break, violated 50% to 7%, which is the last effective zone. So price impulse to break structure, respected the snap PY. I'm expecting a breaker structure. You see, I see price showing you. I see price doing a liquidity grab. So this here was mitigating a liquidity grab of this area. Okay, already mitigated. Bearish breaker structure to convince me here from here. Bearish structure to convince me, or bullish breaker structure. I want more clarity. So what I did is that I looked at my POIs. Price can mitigate to snap POIs, yes, and then it will be under the heavy manipulation. So what I did is that I try to look for my 5 seconds and 15 seconds to find some kind of clarity. And from here, I see there's a snap, and price again is snapped. So these are all liquidity to me. I'm not going to trade off snap. Hell no. So again, this here, snap here, and then from here, just looking at lower time frame with me, guys. See, liquidity grab of this area already. Another one, liquidity grab, and then say again here, we got mitigation of this area already here. And then say if you want to say for like the wick volume, this here is a valid wick volume to trade off. This here is a trade that I didn't take. I should have taken this because yeah, but I don't know whether it will actually deliver 10 pips or not. And then at the same time, it didn't actually meet my concept to trade. See, it can meet 10 pips, but my entry will be a little bit lower, so it might not meet at all. And I want to see how price is reacting, and it doesn't meet the idea to short because of how 5 minute presented as well. So from here, you can see the query grab, this here, the query grab, and then deliver as something look at trade. My trade didn't trigger. My entry was here, but price never retraced. So then, I mean, I just miss this whole thing. I don't look out because the thing is that what if price comes back afterwards? Now I can't anticipate what price will do. So from here, we have a wicked volume. This is a bullish candle, bearish candle down. This here is a volume. Okay, the body is snap. Let's see, price respecting this area. Again, this here is a volume that I'm interested in. This here, body, not touch. So it's valid for me, but ideally always trade from this area, especially when price likes to go on extreme. So what annoys the heck out of me afterwards was that price did a lot of breaker structure, lower time frame. It did a lot of breaker structure, breaker structure, breaker structure. Every single breaker structure after was simply just, I mean, every single breaker structure after this was just getting smaller and smaller. Especially when I have like a couple breaker structures here, 1, 2, 3, say 4, 5, 6, 7. I don't trade a continuation trend without any structural disruption, or I don't trade any breaker structure that has constant mitigation as a liquidity grab, because I can see on high time frame this here is liquidity grab in 5 minutes. I'll show you this. Okay, we don't need to see that here. So price reacted busy. 1, 2, 3, 4, 5, 6, 7. So I've got 7 candles moving up and doing internal range liquidity push in order to move higher. That is fine. That's fine. But from this busy, we're creating an expansive move just like this quickly. See, one candle reaction straight away, body closure over this, then another expansion away. That's what you want to see with a bullish reaction of a fizzy. But this here is a just like one of these ones. Actually the ones on Thursday, the ones that kind of mitigate take a long time to mitigate and then impulse higher. That's fine if it wants to do so. This here is a daily level if we go on the day. So this here we select the daily level. Nothing significant in terms of whether we're actually reacting to a this here was a weekly volume imbalance, the gap here, and then we didn't actually mitigate any 4 hour SIBI sitting here. There's no real SIBI, there's just all consolidation. It really makes sense to purge it, but right now it's just offering retracement because price went up too high. And then say here we do have a price coming into 1 hour, but doesn't necessarily mean that will impulse higher straight away. It can, but doesn't necessarily do that. Because what if price may be interested to come into this volume that impulse higher, that just a query here. It can inverse the Swift gap to go lower. I don't know. But this moment in time, price could just consolidate and just get into New York. And I want to talk about this price action, 15 minutes. So again, we got busy and busy, but there's no reaction to busy. So this whole reaction was just this candle. You see, there's no reaction to the wick, to the lower wick. There's reaction to the body, but did it reach to the 50% of this body? Not really. So price was just constantly impulsing higher without reaction to the busy. So this is something that left me finding it quite suspicious. At the same time, we inverse the busy, so we impulse higher to react to overblock or pure manipulation doing so. This here, there's no city forming, so it just could be a retracement. Then now going from here, we got 5-minute city, we got wick here, we got the last wick. So if price tries to come higher, this will be liquidity. So this here again on 15 minutes, you can see default zone already formed, so price could be looking to retrace by current range and current range trading. So from here, like I said, if there's too many breaker structure without a structural disruption, which is chalk is what I mean by structural disruption. So without chalk and put is that from this high to this high, 50% is not met. From this level to this level, 50% isn't met. So then I know, or for my collection, I know that at least one of these two, this one here or this one here, will be a liquidity to be purged later. So from here, it does make sense for me to trade because it makes my higher time frame insta trade. So taking off the daily level, what price did was a sweep liquidity instead of react respecting all block. So liquidity to pump higher, and then later on you can see busy not falling through, formed here, and then this reaction of busy form, meaning the BPR respected, continued on lower, just quickly entered this area instead. So quickly. Usually I don't look to trade here because like it's a snap. Wait, maybe it's not a snap yet. It's not a snap from here, and then this one here will be a snap. But for one my setup is that the concept makes sense. I would just quickly trade it to just target the structure low, and that's exactly what I did. So price came into this area very quickly. That would be like lower time mitigation of the old block. Just going quickly here. This is the actual QY. Okay, so this here quick mitigation from this area. This is invalidation point. So I did the entry just at the range coming back up here. The range and quickly did the order. I mean, not in the order, like in any execution. And yeah, there we are. We entered to the trade itself. So that was nice. Just like that. I hope you guys enjoyed this video. If you want to, feel free to skip it. And have a good day.